Welcome back to the deep dive. Today, we're doing something a bit different. We're not just observing the market, we're trying to see right through it.
That's the plan.
Our mission today is to take all that, raw, chaotic noise from the trading floor specifically at 12 p.m. Central Time this Wednesday, October 29th, and really distill it down.
Right, into pure actionable intelligence.
Mm,
And the key here is that it's filtered by the IntelliTrader's AI system.
exactly. We want to cut through the noise.
And this isn't looking back, this isn't a history lesson. It's more like a real-time health check, right on the heart of the market action.
So our focus is going to be pretty sharp today. We're zoning in on the top 40 high-volume stocks.
Yeah, the ones really moving. And we're evaluating them using this proprietary scorecard. It's designed specifically to expose those hidden pressures, those extreme divergences you don't always see on the surface.
So for you, the listener, this should be a shortcut, right? A way to grasp what's genuinely driving the market direction right now.
Hopefully, yeah. Less noise, more signal.
Okay, now, we're going to be throwing around a lot of these proprietary AI metrics, so let's maybe set the table first. When we talk about true value, what exactly is the AI measuring there? Why does it often seem so different from the actual market price?
That's a great question. So the AI's true value calculation is essentially its assessment of intrinsic worth. It's not just looking at the ticker price.
Okay.
It blends a whole lot of factors: long-term fundamentals, historical volatility models, peer valuation analysis. It's basically what the stock should be worth, according to the AI, based on all that deep structural data.
So it's like a reality check against the market hype.
Exactly. That's why when we say a stock is, say, 100% overvalued according to the AI, it's a pretty strong statement. It means the current market price seems driven purely by momentum, maybe sentiment, and it's kind of detached from what the AI sees as that fundamental reality.
Got it. So it's the machine versus the momentum trader in a way.
You could put it like that, yeah.
Yeah. And to track that momentum side, we're also leaning heavily on these buyer-seller flow metrics. Can you just quickly clarify those codes? Like, what does seller bot or buyer up actually tell us?
Absolutely. So the flow metrics are all about conviction and acceleration. Think of it that way.
Okay.
Buyer up, for instance, indicates that buying pressure is sustained or, crucially, increasing over whatever time frame we're looking at, daily or hourly.
Right.
Seller D means selling pressure is dominating, but maybe easing off a bit. The up in D indicates the direction of the pressure change.
Ah, okay. So it's not just who's winning, but are they pressing harder?
Precisely. And when we combine them, like say you see seller D daily, but then it shifts to seller up hourly, that's really critical information. It tells you the main daily trend is bearish, okay, but the selling is accelerating rapidly in the last hour. That shows rising directional conviction. Often that leads to what we call a high trend or H trend rating.
So these flow codes help us figure out if a move is like genuine accumulation or just temporary noise.
That's the goal. Is it real conviction or just churn?
Okay, makes sense. And we'll also be using the 200-day and 200-hour moving averages kind of as our technical bedrock, right?
Yeah, absolutely. They give us that immediate, clear signal of the intermediate and long-term technical health. Are we above or below that key threshold? It's fundamental.
All right, enough setup. Let's dive straight into the data. Starting with the real heavyweights, the volume leaders.
Let's do it.
Okay, so let's unpack this. Starting right at the absolute peak of activity. Today's volume champion, maybe not a huge surprise, is NVIDIA.
Yep.
It's sitting around $206.01 as of midday, with just a staggering 196 million shares already traded.
Yeah, almost 200 million shares by noon.
Yeah.
NVDA is kind of the perfect example today of the market's sheer enthusiasm really pushing against the machine's caution.
How so?
Well, technically, just looking at the chart, the stock looks great. Superb health. It had a gap up right at the open.
Okay, strong start.
Right? Confirms that strong initial conviction. And importantly, it's trading safely above both its 200-day and its 200-hour moving averages.
Both key levels.
Exactly. For any technical trader, those are two massive green flags. They signal robust health, both intermediate and long-term.
Okay, technically strong, but then, like you said, we look at the AI's true value calculations, and the picture gets, well, extremely complicated.
It really does. The numbers are practically waving a giant red flag here.
What are we seeing?
Well, interestingly, pre-market, the AI actually had it pegged as slightly undervalued by about 2%.
Okay.
But the moment the market opened and absorbed all that volume and price action, the valuation just flipped. violently.
Flipped how?
We are now looking at NVDA being 105% overvalue based on the daily time frame.
105%
Yeah,
overvalued.
yes. And even if you zoom into the short term, the 1-hour time frame, it's still showing 13% overvalue.
Wow. So the AI is basically screaming that this price is way ahead of itself.
That's the warning, yes. It suggests the current price is driven by immense, maybe unsustainable speculative enthusiasm. Like the market is pricing in just incredible, almost magical future growth way beyond what the model supports right now.
And does the flow data support that? Is it all just bullish by pushing it up?
Well, that's the other interesting part. The flow data actually confirms this massive volume isn't pure bullish accumulation. A lot seems to be churn and maybe profit-taking.
Okay.
We see the daily buyer-seller direction coded as seller DN. And the hourly is also buyer DN.
So down pressure on both.
Right. Even with that nearly 200 million shares traded, the net directional pressure, according to the flow metrics, is actually leaning towards the downside. It suggests traders might be using this momentum, this strength, to actually exit positions.
Selling into the rally.
Potentially, yeah. And notice the power trend is only medium M trend, despite the huge volume.
Right, you'd expect high trend with that kind of volume if it was all one way.
Exactly. If the flow was overwhelmingly buyer up, we'd definitely expect an H trend. The fact that the current volume is already 65% of the entire previous day's total.
Yeah.
And importantly, the last hour saw an acceleration. 74% of the previous hour's volume suggests a highly active market, yes, but one that's internally conflicted. Traders buying, sure, but it looks like just as many might be selling into that strength.
Fascinating. A real tug of war inside the volume leader. Okay, now let's move just behind NVDA to the next tier of big volume movers. How do they stack up? We've got TSLL, Ford F, and Pfizer FI.
Okay. PSLL, that's the leveraged Tesla Bull ETF. It's definitely running hot. 70.5 million shares traded.
High volume there, too.
Yep. And it has a really high IV rank, 116% upward. That indicates major expected volatility priced into the options. Big moves expected.
And valuation, similar to NVIDIA.
Very similar theme. Like NVDA, it's showing as highly overvalued by the AI. It's sitting at 5% overvalue daily and a more significant 15% overvalue on the 1-hour true value.
So the market loves these momentum plays, even if the AI is cautious.
That seems to be the pattern. And TSLL also has a key technical alert flagged. A squeeze indicator reading of 15.
15, isn't that really high?
It's one of the highest readings we track, yeah. It essentially tells us that market compression is building up, like a coiled spring. A violent move, potentially in either direction, could be imminent.
And the flow? Is it all bullish?
It's mixed, but still powerful. The daily flow is buyer up, which suggests strong underlying interest, maybe longer-term accumulation.
Okay.
But interestingly, the hourly flow reverses to buyer down. It's signaling that some of that steam might be escaping in the short term. Again, that medium trend, M trend.
Interesting mix. Okay, what about Ford?
Yeah.
F, solid volume too, 68 million shares.
Right. Ford carries that crucial and often quite rare flag of unusual activity.
Unusual activity. What does that usually point to?
Could be news, could be block trade, something outside the normal pattern that the AI picks up.
Mm-hmm.
And valuation-wise, Ford also shows significant stretching. It's 43% overvalue daily and 8% overvalue hourly.
43% daily overvalue. That's quite a bit for Ford.
It is. And the flow mirrors TSLL in its complexity. Buyer up daily.
Okay, underlying strength.
But then it flips pretty aggressively to seller done hourly. That results in a neutral trend. End trend.
Neutral, so the forces are balanced.
Seems like it. Something unique is definitely happening there, perhaps related to whatever triggered that unusual activity flag.
Mm-hmm.
And it's preventing the trend from really establishing a clear direction right now.
Okay, so NVDA, TSLL, Ford,
Yeah.
all high volume, mostly overvalued, complex flow. Got it. Now, Pfizer, FI. You said this one's the anomaly today.
Oh, yeah. If the others are interesting, FI is today's genuine market spectacle. It's sitting right there with the others in volume, 67.8 million shares. Massive activity.
But the story's different.
Completely different. The story here looks like absolute panic driving the trade.
Panic? Why?
Well, first off, FI experienced a major gap down at the open. Big drop right away.
Okay, negative start.
And then you look at the AI valuation. This is where the AI truly diverges from what the market is doing. Or maybe.
Oh, yeah.
Maybe it foretells a major correction needed. The AI is absolutely screaming that the price is wrong.
How wrong?
We are talking 72% undervalue based on the pre-market data alone.
72% undervalued.
Yes. And it gets worse. A colossal 134% undervalue based on the daily true value metric.
Wait, hang on. 134% undervalued. Does that mean the AI thinks the current price is less than half of what it should fundamentally be worth?
That's exactly what it implies. Based on its fundamental model, yes.
Wow. So why is the market punishing it so severely then, if the AI sees that much value?
Because the market isn't trading on the AI's model right now. It's reacting likely violently to some kind of cataclysmic event, a major earnings miss, maybe catastrophic guidance, a big regulatory challenge. Something bad happened.
I see.
And the selling pressure is just totally overwhelming any perception of that intrinsic value. The technical context confirms the panic too. FI is trading below both the 200-day and the 200-hour moving averages.
Below both major levels.
Right. This isn't just a dip you buy. From a technical standpoint, it looks like a structural breakdown. A clear negative technical signal, even though the AI is showing this extreme low fundamental valuation.
Okay, and the volume, does it confirm this panic selling idea?
Oh, absolutely. The volume data here is just astonishing. FI's current volume, midday, is an unbelievable 1,169% of the entire previous day's volume.
1,169%. That's nearly 12 times the normal activity.
That's 12 times.
Yeah.
That kind of volume ratio, combined with that extreme undervaluation, it tells us this is explosive activity, driven almost entirely by sellers hitting the exits.
What's the flow show?
Heavily skewed towards selling, as you'd expect. It's seller D daily, but then it transitions to a massive acceleration of selling on the hourly seller up.
Seller up hourly, meaning the selling is getting stronger right now.
Exactly. That results in a high trend, H trend rating. But it's a high trend of persistent bearish momentum. It looks like pure capitulation. And the AI is just sitting there logging the massive discount this panic is creating relative to its models.
Incredible story there. Okay, let's shift gears slightly. Let's look at the broad market's vital signs through the major ETFs, SPY and QQQ. What are they telling us?
Right. These are crucial as our macro trend signals. SPY for the S&P 500, QQQ for the NASDAQ 100.
How's the activity level?
It's actually pretty moderate relative to their usual massive size. SPY is around 54% of yesterday's volume, QQQ about 48%.
So not huge institutional conviction pushing things hard either way, more like cautious consolidation.
That's what it suggests, yeah, rather than a strong directional push. Technically, though, both look healthy. They're trading above their critical 200-day and 200-hour moving averages.
Okay, so the underlying structure is still sound for the indices. What about valuation?
Valuation-wise, they kind of reflect that general market exuberance we saw hints of in NVDA. Both are showing slightly overvalued, sitting somewhere between 4% and 6% on the daily true value metric.
Okay, a bit stretched, but not dramatically like NVDA.
Not dramatically, no. What really stands out here, though, is their identical hourly flow signature.
Identical? What is it?
Both SPY and QQQ are showing seller Dan daily, but then transitioning to buyer Dan hourly.
Seller Dan daily, buyer Dan hourly. What does that imply?
It suggests that the daily selling pressure, maybe some profit-taking after a recent rally, is being met by slightly diminishing hourly buying power. The buyers aren't stepping up as aggressively hour to hour.
Then the trend rating.
The result for both is a medium trend, M trend. So neither a strong breakout higher nor a sharp reversal lower. Just kind of churning in the middle range for now.
Okay, so cautious stability in the main indices. Now, this usually gets amplified when we look at the leveraged funds, right? This is where market sentiment gets multiplied.
Absolutely. By 3 times, usually. And you see it clearly today. Take SOXL, that's the Semiconductor Bull 3X ETF.
Okay.
It has a very high IV rank, 119% downward, indicating high volatility expectations, maybe a skew towards puts, and valuation. Massively overvalued, according to the AI. 89% overvalued daily.
89%. Wow. And volume, flow.
Volume ratio is strong, 84% of the previous day. And the flow is decisively bullish, buyer up daily. That results in a high trend, H trend rating.
So total conviction there.
Seems like it. The conviction is clear. The bulls are firmly in control in the semiconductor space, at least via this leveraged tool, and they're pushing it higher regardless of those AI valuation warnings.
And we see that same kind of bullish conviction in TQQQ, the Ultra Pro QQQ ETF.
Exactly the same story, just slightly less extreme valuation. TQQQ is sitting at 17% daily overvalue and 20% 1-hour overvalue. Again, exhibiting really strong bullish momentum, signaled by that buyer outflow and a high trend, H trend power rating.
It's interesting, isn't it? The underlying indices, QQQ itself, are M trend, kind of cautious. But their leveraged bullish counterparts, SOXL and TQQQ, are H trend, full speed ahead. Tells you where the speculative money is flowing.
It really does. It's chasing those returns aggressively.
Okay, so what about the other side? The inverse mirror, QQ, the Ultra Pro short QQQ.
Yep. SAS QQQ acts as the perfect inverse, as expected. It experienced a gap down today. It's trading below both its 200-day and 200-hour moving averages.
Technical breakdown, basically.
Reflecting the market rise, exactly. Now, interestingly, according to the AI, it's fundamentally cheap. It's sitting at 19% daily undervalue and 21% 1-hour undervalue.
So fundamentally cheap based on the model, but technically broken because the market's going up. How does the flow look? Is everyone dumping it?
The flow is bearish, as you'd expect for a short ETF when the market's up, but it's not explosive. It's coded as buyer D and daily and seller D hourly.
Buyer D and seller D, and what trend does that give?
Lands it in an M trend, a medium trend. So the directional pressure is definitely bearish for the shorts, confirming the index strength, but the momentum isn't strong enough yet to force a really serious breakout in selling volume for QQ itself. It's more like a slow, steady bleed for the inverse play today.
Gotcha. Okay, finally in this section, let's just quickly touch on the crypto ETFs. IBIT for Bitcoin, ETH for Ethereum.
Right. Both of these also experienced gap downs at the open today.
Okay. Any key technical signals?
IBIT offers kind of a mixed technical picture, which is interesting. It's currently trading above its 200-day moving average.
So long-term trends still okay?
Potentially, yes. The long-term Bitcoin trend seems intact based on that key average, but crucially, it's trading below its 200-hour moving average.
Ah, so short-term pressure is down.
Exactly.
Yeah.
It suggests that recent market pressure, short-term stuff, is definitely downward. And both IBIT and ETH are showing a consistent seller-up trend hourly.
Seller up. Selling accelerating in the last hour.
That's what it indicates, yeah. Accelerated selling pressure in the last 60 minutes suggests maybe some profit-taking or perhaps just cooling demand in these higher risk plays as the session wears on.
Okay, that's a good overview of the landscape. We're going to dive into the really extreme true value signals next, where the AI spots the most shocking differences from the market price. But first, just a quick reminder for everyone listening.
Yeah, if you are enjoying these insights, make sure to hit that follow button and turn on notifications so you're the first to get our market analysis update every day.
Definitely helps us out. Okay, we'll be right back to look at the extremes.
Welcome back. All right, this section, this is really the core of what the AI analysis provides. We're looking for the sharpest divergences, right, between the current market price and our system's calculated true value. These are the outliers that can tell us the most about market sentiment, maybe even market sanity.
Or lack thereof sometimes.
Sometimes. Yeah, and today, there is one stock that stands just head and shoulders above all others in terms of extreme overvaluation. That's Open Door Technologies. The numbers here, well, they almost defy belief.
Okay, lay it on us. How extreme are we talking?
We are looking at an astronomical 11,172% overvalue based on the daily true value metric.
1,172% overvalued.
Yes. Let me just put that figure into context for you. The AI model is fundamentally arguing, based on its data, that Open Door's price should be trading at less than 1/10 of its current market value.
Less than a tenth. How does the stock even maintain a price point that the AI sees as deviating from reality by that much? What's going on there?
It has to be pure speculative euphoria, right?
Yeah.
It's likely a narrative driven heavily by retail interest and momentum chasing that's become entirely detached from, established financial metrics the AI weighs heavily.
So people are betting on some future outcome.
They have to be. Betting on an outcome that's maybe years, perhaps even a decade away, and completely ignoring the current earnings potential or lack thereof. It really illustrates the kind of speculative fever that can grip certain parts of the market.
It's fascinating. What about the shorter term value?
Interestingly, the hourly true value actually shows a slight 3% undervaluation.
Undervalue hourly? That's weird.
It is weird. It suggests the very short-term dynamics, the last hour's trading, might be trying to pull it back up slightly, maybe some dip buying. But that massive long-term valuation pressure, that 1,172% overvalue daily, is still just sitting there like an anchor.
What's the flow data doing on Open? Is it supporting this crazy valuation?
No, the flow is actually seller D and daily, transitioning to seller up hourly.
Seller up hourly again.
Right.
Selling accelerating.
Right, which gives it that medium trend, M trend. So even with this absolutely massive overvaluation warning from the AI, the selling pressure is currently accelerating. It confirms that at least some traders are trying to cash out of what looks like, well, an absurdity on the valuation front.
Okay. Are there other stocks showing similar extreme overvaluation, even if not quite that extreme?
Oh, yeah. There are others, though none quite reach the dizzying heights of open. BE, that's Bloom Energy, clocks in at 510% overvalue daily.
Still huge.
Still absolutely huge. And it's also showing 29% overvalue on the 1-hour metric. Its volume is strong today, 247% of the previous day's volume. And it has a high trend, H trend.
So strong momentum pushing a fundamentally overextended stock even further.
That's exactly what it looks like. Strong directional momentum, pushing an asset that the AI thinks is already way, way overextended, even further from the mean. Rigetti Computing, RGTI, is also up there. It's showing 159% overvalue daily.
Okay.
Though RGTI shows a bit of a mixed signal, interestingly, it's actually 11% undervalue on the 1-hour time frame.
So a fight between long-term exuberance and maybe some short-term profit-taking or doubt.
Could be. That's often what those conflicting time frame valuations suggest, a battle playing out.
All right, now let's flip the script entirely. Let's look at the market's whipping posts today. The stocks that are deeply discounted, the ones the AI thinks are fundamentally dirt cheap right now.
Okay, we definitely need to talk about VRNS, that's Varonis Systems.
VRNS, what's the story?
Well, first, it suffered a gap down this morning.
Yeah.
And it's exhibiting extreme undervaluation, according to the AI. We're seeing 61% undervalue daily.
61% under. Okay.
And a truly massive 80% undervalue on the 1-hour metric.
80% hourly undervaluation. That suggests the mispricing is happening right now violently.
It does. It looks like the market is just responding viciously to some negative news catalyst, forcing massive capitulation selling.
Is the volume confirming that?
Absolutely. There's a volume alert on VRNS confirming this aggressive panic. Volume today is 499% of the previous day's volume.
5 times normal volume.
Exactly. And that's combined with a high trend, H trend rating.
So heavy, accelerating selling.
Textbook for selling. It looks like the inherent value, or at least what the AI's model calculates as inherent value, is being completely overwhelmed by the immediate overwhelming fear of the selling crowd. It's a great illustration of how pure momentum and fear can temporarily just flatten fundamental value perceptions.
Wow. And of course, we have to re-mention Pfizer here, right? And that remains our other major outlier on the undervalued side.
Absolutely. That 134% daily undervalue reading confirms its status. When you see these deeply undervalued stocks, according to the AI, paired with that kind of explosive H-trend volume, it almost always signals a market overreaction to a specific severe catalyst. Something happened that hasn't perhaps been fully structurally priced into the longer-term true value model yet.
So the big question is, will these stocks quickly revert back towards the AI's value, or has the market correctly identified a permanent change in the story for these companies?
That's the million-dollar question, isn't it? Is it a temporary panic or a fundamental repricing? The AI gives us a benchmark, but the market ultimately decides.
Okay, let's shift focus now to momentum itself, understanding that buyer-seller flow and the 1-hour power trend. This tells us about directional conviction right now, doesn't it?
Exactly. It reveals the true force dominating the current trading session. And we really need to look closely at those stocks flagged with a high trend, H trend, that indicates strong, often unyielding directional pressure.
All right, let's start with the H-trend stocks that are showing persistent selling pressure. We mentioned KHC earlier, but who else fits here? You flagged PFE, Pfizer, VZ, Verizon, and the financial ETF, XLF.
That's right. All three of those, PFE, VZ, XLF, share that critical pattern we discussed. They show seller-dean daily flow.
Okay, bearish daily.
But crucially, that transitions to seller up hourly, meaning the overall bearish daily trend isn't fading away. In fact, the hourly selling is accelerating right now. That's what drives the high trend rating in these cases.
And Kraft Heinz KHC, you said, falls here too.
Yes. KHC compounds its technical weakness, remember, it's trading below both 200 MAs and is 7% undervalue 1 hour. It compounds that weakness with this aggressively accelerating selling volume pattern. These are pretty clear signs of a sustained bearish attack on these names.
Okay, strong selling conviction there. Now, switching to the bullish side, where are we seeing consistent high conviction buying pressure with an H trend? You mentioned LUMN, Lumen Technologies, AMZN, Amazon, and VL, the miner.
Correct. LUMN is a particularly standout example today of just pure momentum. It's showing consistent buyer upflow across both daily and hourly timeframes.
Okay, buyers in control.
Buyers firmly in control. Furthermore, its 1 hour true value is showing 52% overvalue.
So it's expensive, but still going up strong.
Exactly. And its last hour volume ratio was 135% of the previous hour's volume. So buying accelerated into the last hour. This looks like unadulterated upward momentum, fueled by heavy buying and aggressive valuation extension. The ALE also achieves that H trend with consistent buyer upflow, demonstrating significant confidence in the bullish direction for that name as well. Amazon too, H-trend, buyer up, big tech joining in.
Interesting. Okay, so we have the H trend extremes. Then we encounter the neutral and mixed trends, the N trend stocks. This includes some really major high-profile names today. Intel, INTC, AMD, Apple, APL, QuantumScape, QS, and Tesla, TSLA. How should we interpret a neutral trend in these high-volume giants?
Yeah, it's a good question. When the AI flags an end trend, it usually signals that the immediate buying and selling pressures are fighting to something of a stalemate. The forces are balanced, at least temporarily.
Can you give an example from that list?
Sure. Look at QS and TSLA. Both of them actually show buyer up daily flow.
Okay, so underlying bullishness, accumulation through the day.
Seems like it, yeah. Suggests underlying bullish sentiment. However, both of them register buyer DN on the hourly time frame.
Buyer D and hourly.
Yeah.
So short-term selling pressure.
Right. This tells us that the strong daily optimism, that accumulation, might be running into significant short-term profit taking, or maybe just cooling demand from intraday traders as the price rises. And that neutralizes the overall power trend, leading to the end trend rating.
So we've got these large pockets of accumulation being met by maybe equally aggressive short-term distribution, leading to a temporary deadlock.
That's a good way to put it. AMD shows a very similar dynamic. Buyer up daily, but buyer DN hourly. While it doesn't have a daily true value listed in our data set today, it is showing 3% overvalue 1 hour. Again, the forces just seem balanced right now for these end trend names. No clear winner in the short term.
Okay. And finally, we observe the mid-range trends, M trend. You mentioned AT&T, T earlier.
Right. T is interesting because it's technically quite bearish. Trading below both the 200-day MA and the 200-hour MA. Not a good look.
Below both, yeah.
Its flow is seller DN daily, but it transitions to seller up hourly. Remember that accelerating selling pattern?
Yes, but it only gets an M trend, not H trend like Pfizer or Verizon.
Correct. In this case, the combination lands at an M trend. Perhaps the acceleration isn't quite as strong, or other factors are balancing it slightly. Crucially, T is also 16% undervalued daily, according to the AI.
So it's cheap, technically weak, and selling is accelerating, but not quite H trend level.
Exactly. This stock is trading at a significant discount based on the AI model, but that selling pressure persists, and the technical health is poor. It makes it look like a potential value trap for now, maybe until that technical picture improves or the filling pressure really eases off.
Makes sense. Okay, let's move to the specific technical alerts the AI flags. These are signals that something unusual has happened or might be about to happen, deviating from the norm. Let's start with that rare one, unusual activity.
Right. These don't pop up every day on the high volume list.
Yeah.
We identified 5 stocks flagged for unusual activity today. Ford F, which we discussed, WULF, JMF, the financial ETF XLF again, and KBTS.
Okay. Ford and XLF are interesting because they're so large, but you highlighted JMF earlier. Why is that one standout?
JMF is just an outright volume explosion. It's flagged for unusual activity, yes. It also had a gap up at the open, and it was already showing 21% overvalue based on pre-market data.
Okay, strong positive signals.
But the absolutely critical number here is its volume ratio. Midday volume is 1,847% of the entire previous day's volume.
1,847%. That's nearly 20 times the prior day's trading volume.
Yes, that makes it the highest volume ratio in our entire top 40 set today, by a huge margin.
What does that kind of volume signify?
This looks like a textbook reaction to some kind of massive, likely unexpected news catalyst. Could be an acquisition announcement, a major partnership, maybe exceptional earnings blew everyone away. Something big.
So not just random trading.
Definitely not. When you combine that kind of volume ratio with a gap up and already high overvaluation, you're likely looking at institutional traders and algorithmic systems reacting violently, almost instantaneously, to new fundamental information. This isn't casual day trading. It suggests a structural shift in how the market perceives JAMF.
Got it. Okay, moving on to the squeeze indicators. These signal market compression, right? And potential for high volatility soon.
Exactly. Think of it as potential energy building up. And we have some very high readings today. TSLL, TSLA, and Palantir, PLTR, all share the highest squeeze reading possible in our system, which is 15.
A reading of 15, max compression.
That's the maximum compression signal, yes. It essentially means the stock's trading range has become incredibly tight relative to its historical volatility. Like a compressed spring, coiled so tight that the eventual breakout, when it happens, will likely be violent and rapid.
And it could break either way.
Typically, yes. The squeeze itself doesn't guarantee direction, just the potential magnitude of the move once it starts. And it's interesting that despite their varied fundamental valuations from the AI.
Right. TSLA was slightly overvalued, PLTR 10% over, TSLL highly overvalued.
Exactly. Despite those differences, they all share this technical characteristic, this potential for sudden, explosive movement.
Mhm.
Other stocks like Archer Aviation, ACHR, with a reading of 7, Intel INTC at 6, and Open Door also at 6, have notable squeeze readings too. It suggests volatility is potentially building across several key sectors and names. TSLY, the yield ETF, also shows a squeeze, albeit lower at 1.
Okay, so watch those names for potential fireworks. Finally, let's use the moving average position analysis. You mentioned it earlier as our overall market health barometer. Where are things sitting technically?
This provides a really good structural overview, and the picture remains undeniably robust for the majority of the technology and market leaders we looked at. Most of those major names, think NVDA, TSLL, Ford, Intel, SoFi, SOXL, Tesla, Palantir, Amazon, and the QQQ ETF itself, are trading comfortably above both their 200-day and 200-hour moving averages.
Above both key, long-term, and intermediate-term averages.
Correct. This confirms that the prevailing technical health for these market leaders is still strongly bullish. Fundamentally, they might look stretched by the AI, but structurally, on the charts, they look sound.
But the bearish signals are just as clear in those distressed names we talked about, right?
Absolutely. We see 3 stocks consistently trading below both 200 MAs, FIZ, FI, the short QQQ ETF, so QQQ, and Kraft Heinz, KH.
Well, both.
That confirms a consistent, pervasive, bearish technical outlook for all 3, regardless of whatever their AI true value might be saying. For FI especially, that means the extreme selling pressure we see is compounded by this underlying long-term technical weakness. It's fighting multiple battles.
And then there are those tricky mixed signals, where a stock is crossing or maybe just below 1 MA.
Right. And these often represent potential inflation points or areas of conflict. We noted AT&T, is below the 200-day, but managed to stay just above the 200-hour. It could be a short-term bounce, attempting, maybe failing, to recover from a longer-term breakdown.
Okay.
IBIT, the Bitcoin ETF, shows the opposite. Above the 200-day, suggesting the long-term crypto narrative might still be intact for some.
But below the 200-hour.
Exactly. Below the 200-hour, indicating that shorter-term market pressure is clearly downward right now. And Open Door, despite its absolutely astronomical overvaluation, actually has a cross signal on the 200-hour MA.
The cross signal.
Yeah, suggesting it's oscillating right around that key short-term average. Technical instability in the short term likely as momentum traders clash with sellers who are looking at those longer-term valuation concerns.
Fascinating how these different layers interact. Okay, let's try to wrap this up and synthesize everything.
Sounds good.
What a phenomenal amount of data we've just gone through. If we try to synthesize everything we've looked at, the market at midday today seems defined by 2 really extreme, almost counterbalancing forces. And both seem to be running at peak velocity right now.
I think that's a great way to put it. The first force is definitely that technical strength and, frankly, exuberant momentum-driven buying we see. It's evident in the majority of major tech stocks trading strongly above their 200 MAs.
Right.
And this is fueled by assets like SOXL, TQQQ, even NVDA to some extent, which are running on these high AI overvaluation readings. It indicates massive speculative confidence, maybe ignoring traditional value metrics. So you've got institutional technical health combined, perhaps, with a wave of retail enthusiasm.
Okay, that's force 1. Bullish momentum, strong technicals, high valuation. What's force 2?
Force 2 is the darker side. It's fundamental and technical distress, driven by what looks like outright panic selling in specific areas.
Like FI and VRNS.
Exactly. The massive volume and deep undervaluation readings in FI. Remember, 134% undervalue daily, nearly 1,200% volume ratio, and VRNS with 80% undervalue hourly and 500% volume ratio. That clearly demonstrates that certain key stocks or sectors are undergoing just brutal sell-offs, deep capitulation.
And it's happening regardless of what the AI model calculates as their true value?
Precisely. The market is just liquidating, seemingly fearlessly, in those names.
And the single most shocking divergence, the one that maybe encapsulates this whole midday story.
It has to remain the valuation alert on Open Door, that mind-boggling 1,172% daily overvalue reading. It's the machine essentially telling us that the exuberance and the narrative around that particular stock have reached a level that fundamentally defies belief within traditional valuation models. It's off the charts.
So, okay, what does this all mean for you, the listener, as we head into the final hours of the trading day? The midday data shows the strong bullish positioning across many tech leaders.
Yep, technically strong.
Yet it's counterbalanced by incredibly heavy seller activity driving these deeply discounted valuations in other key areas. We're signaling both high conviction panic and aggressive optimism simultaneously.
It really raises an important question, doesn't it? The market is signaling both extreme exuberance. You see it in that 11,172% daily overvalue in open, and at the same time, deep technical distress and panic selling, demonstrated by that 1,169% volume ratio on the 134% daily undervalue in FI.
Two complete extremes.
Exactly. So the provocative thought is, how long can these highly conflicting, high-volume signals coexist in the market before one direction finally capitulates and forces a massive, potentially widespread correction or confirmation? It feels like we're sitting right on a knife's edge between euphoria and fear.
A fascinating place to be watching from. We'll definitely keep tracking it. And just one final reminder.
Yes, if you are enjoying the insights from this deep dive, please make sure to hit that follow button and turn on notifications. That way you'll be the first to get our market analysis update every single day.
Thanks for tuning in. We'll see you next time.